and welcome to Macro Matters. My name is Stephanie Kelly, and together with Paul Diggle, we co-host this economics, politics, and markets podcast. And this week, it seems like there's nothing more relevant to investors than the single biggest political risk event of, I would say, the 4-year cycle, and that's the US presidential elections and legislative elections.
The stock market numbers are very close to record, great stock market numbers and 401k numbers and everything else.
Stockbrokers and hedge fund managers did not build this country. You built this country. The great American middle class. The unions built the middle class.
So there we heard Donald Trump and Joe Biden putting forward their views about the role of markets and the importance of the middle class for the future of the United States. But of course, we know that this election is much more complex than just what is each candidate saying about markets. It's really about what are the policies that they're going to put in place and what does that mean for investors and what does that mean for economic growth. So I'm delighted that today I'm joined by James McCann, our Senior Global Economist, who is responsible for our US forecasting. And we're going to talk through some of not only the economics, but also the market implications of the US election next week. So thanks, James, for joining us.
Thank you for having me.
So maybe to start off, just to explain, we've talked about the US elections a few times in this podcast, and today we're going to broadly talk about three possible outcomes, what we think are the three most likely outcomes. The most likely outcome in our view is that Joe Biden wins the presidency and that the Democrats take a majority in both the House and the Senate. So we'll talk to that. That's our base case. We call it the clean sweep. Then we're going to talk about what happens if Joe Biden wins the presidency, but the Republicans hold on to the majority they currently have in the Senate. So we're going to call that the Biden split Congress outcome. And then the third we're going to talk about is what if President Trump is reelected? And alongside that, the Democrats hold on to their current majority in the House. And so we'll call that the Trump split Congress scenario. Now, of course, there are other ways this could break, but we think these are by far the three most likely outcomes. And as I mentioned, our base case is that clean sweep that I talked about. So, James, maybe to start off, what do you think of those three outcomes would be the best for growth? Maybe that's a little bit simplistic, but what do you think would be the best outcome for you in terms of forecasting forward for US growth?
Yes, well, I think the key element that we need to consider at the moment for the US growth outlook is exactly how fiscal policy is orientated over the next few years. We know that fiscal policy has been very, very important in spurring what's been a pretty impressive rebound in the US economy following the lockdown earlier this year. But we also know that a lot of the benefits of that fiscal policy splurge are starting to already expire. We have another wave of COVID infections gripping the US. The vaccine is still some way away. So I think we're still very much of the view that further fiscal support is required. We know that Congress failed to get a package together as we had suspected they would ahead of the election. So really the onus falls on the winner of this election to do something on fiscal policy. And we think it's simply easier for a unified government to deliver on that front. So with regards to that COVID short-term relief plan, we think it's more certain and potentially much larger under the Democrat sweep. We know Democrats have already passed a $3 trillion bill in the House, more than $3 trillion actually, back in May. Now, while they might moderate that a little bit, given we've moved on in the crisis since, I still think it's very likely that under the Democrat sweep, we get a very large fiscal package based around that HEROES Act that they passed in the House. And that will provide a fairly certain and an immediate short-term boost to growth. And then the other aspect to keep in mind is what can be done on the broader policy agenda. So Joe Biden is campaigning on a platform of higher taxes, but also significantly higher spending. And when we try and net this out, we think that his broader policy agenda, when we step away from those COVID short-term relief measures, is also quite stimulatory, and certainly in terms of short-term growth, but maybe in terms a little bit of long-term growth, given that he's looking to invest a lot in certain parts of the US infrastructure. So for those reasons, based around their ability to get policy done and their desire, I suppose, for quite a loose fiscal policy setting, we think that the Biden sweep, the Democrat sweep, would be the strongest near-term and probably medium-term growth environments.
So I think that's a really useful and really succinct summary of the different pieces at play, right? The fiscal policy, the kind of short-term stimulus, the long-term balance of investment and spending. And I think that's maybe the place to move to then is the slightly less positive, which is to ask, what do you think the worst case outcome is from this election, from the perspective of short to medium to even long-term US growth outlook?
Yeah, I think what we have to do here is almost flip this on the head and rethink that policy making is important. What's the scenario in which we'd be most worried about policy stasis? So an environment in which the recent partisanship we've seen around the size of the COVID support program, the desire for any COVID support program, in fact, has come into question. And I think our fear is that partisanship might be most acute, obviously under the split government scenarios, but maybe most acute under the scenario in which Biden wins the White House, but faces a Democratic House of Representatives and a Senate held by the Republican Party. This is a dynamic that we saw in 2010 when Obama faced split government and really struggled to get anything done. There was a big focus, particularly through the Tea Party movement, on fiscal consolidation, withdrawing fiscal support. And our real concern here is that a similar dynamic might build up, which would potentially limit the size of any COVID relief, or maybe even more likely make any further COVID relief completely impossible from a partisan politics standpoint. So our fear then is that you've got this big withdrawal of fiscal support at what we would consider to be a premature point. And the period after the financial crisis in which the recovery was weak, inflation was low, the Fed was stuck at the lower bound, struggling to gain traction in the economy. We think that could be an environment that's repeated under that scenario. We think it's pretty critical that fiscal support stays in place. So I think that's where our big fear is, that if you get a Biden win but facing a split government, that partisanship really torpedoes what's been a pretty solid US recovery from this point onwards. And that would lead to an environment of weaker growth, weaker expected inflation, and will put more pressure on the Fed and probably leave them pinned to the lower bound in terms of interest rates for a longer period of time.
So that's a really quite a striking divergence, I guess, between two scenarios that really have the same president at the helm, right? And I think that's something that investors, need to bear in mind, that there's huge focus on the presidential element of this election, which of course matters a lot. And, we might get into the regulatory discussion, the trade discussion, but when it comes to fiscal policy, I think you've made the point quite clearly that, it really, you need Congress on board. And so maybe to that end, how much do you think about the size of the majority in the Senate? So just for people's awareness, at the moment, it's looking like, based on current polling, that they could get to a majority. But there's a big debate about whether they can get to 50 or 51, 52, 54. I mean, how much of a difference does it make for you when you're thinking about your forecast, whether it's 50 or whether it's 53 or 54? Does it make a big difference?
It does make a difference, yeah, because I suppose working with a smaller majority, you have to, by passing any legislation, you obviously have to be a little bit more unified in what you get through. So the Democrats with a much smaller majority would not be able to lose any votes. So if they had more moderate members, they'd have to design policies which were able to capture their votes too. A good way of thinking about this might be around Biden's sort of medium-term fiscal plans, particularly around the taxation and spending side. So if we add up what he has in his current manifesto, then tax hikes are very large as a proportion over the 10-year budget window. So they would be over 10 years raising around $4 trillion. Now his spending initiatives are even larger. So current additions, and it's always hard to get this exactly, but would suggest between $6 and $7 trillion over a decade. So these are obviously very, very large numbers. What we might see and what might be likely under a narrow Senate majority or a very, very thin Senate majority is that the size of those is just tempered a little bit. So some of the tax initiatives are moderated, some of the spending initiatives are moderated. And in fact, we've tried to build that in a little bit to our forecast already, that Biden isn't able to pass everything because he's designed it in his manifesto. He's pared it back a little bit to say $2 trillion worth of tax increases versus $3 trillion of spending increases. But I think that the concern for them would be that a very, very slim majority would make that job even potentially harder. And then there's one thing, I'd be interested to hear your view on this. There's been speculation around the filibuster and whether Democrats could make changes to the filibuster, given the issues that they've had legislating in the past, and that would, if they were to change it, open up more legislative possibilities. It mean they wouldn't have to move through the reconciliation process around some of these budgetary programs, which would be an easier way for them to do business. But I wonder if they have a slimmer majority, some of the more moderate components of the Senate that they hold would not want to make such a far-reaching and important change to policy, which obviously could make policymaking easier under the Senate if Republicans take control of it at some time in the future. So that could be another angle. Potentially interested to hear your view about how that slimmer majority perhaps restricts some of their ability to legislate.
Yeah, I think that's one of the big kind of political questions about a Democratic majority is how large a majority do you need before you make really long-term structural changes? And though for people listening, the filibuster we've talked about a few times on this podcast and in written communications, but it's essentially a way by which they can prevent passing legislation or they can slow it down. And often you end up requiring quite a large majority in order to move past the filibuster. And so the question is maybe not even just do they get rid of it or do they not, but what changes get made to the filibuster. So, for example, the Supreme Court Justice confirmation process is going on at the moment. The reason that can happen quite easily for the Republicans is because a number of years ago they removed the filibuster. I think actually the Democrats removed the filibuster when it comes to Supreme Court nominations. So you can kind of be quite specific, get rid of it in certain places, or kind of put restrictions on it, or essentially get rid of it in kind of really key policy areas. And I kind of agree that the more senators you have, the easier that is to do, because it tends to be that more left-wing or liberal senators are more keen to make those kind of changes. So maybe if we switch then to a Trump administration, so a re-election for President Trump. Now, clearly he's behind in the polls, so it's understandable that we are focusing on the Biden outcome, but in our scenarios, we still give about a 25% chance that Trump gets reelected, by far most likely with that split Congress that I mentioned. So, James, when it comes to factoring in, essentially business as usual, I mean, does it look like business as usual in your economic forecasts? Or how do you think about what a Trump split Congress outcome would mean for the outlook?
I think there's certainly an element of business as usual there for sure. I think particularly around the regulatory side, we'd expect more consistency. The president has taken a relatively light touch regulatory agenda, or at least tried to loosen regulation across some key sectors like financial services, environmental protections, the oil and energy industry too. So I think there's continuity there. I think there's probably continuity around aspects of trade policy too. So his unilateralism, his desire to directly wage the trade conflict to try and push countries into concessions around some of the key areas that he cares about. So I think there'll be some continuity on the regulatory side, potentially on the trade side as well. I think on the fiscal side, it's a little bit more nuanced. I mentioned earlier that split government was an environment in which it was harder to get business done, particularly through Congress and particularly around COVID relief legislation. The president has shown that he can pass legislation, and that constellation of a Republican White House, a Democrat House, and a Republican Senate can get support through. And so we probably would expect a more modestly sized COVID support package to be passed in that environment. It might range in the region of $1 to $1.5 trillion. It would look a little bit different to what we would expect, obviously, not just in terms of size, but composition and under the Democrat sweep. But we do think you could get some fiscal support through, and that obviously would be helpful. Looking a little further forward, though, if we think about the types of medium-term policies the president might like to pursue, things like extensions to his tax cuts, for instance, or an expansion of those tax cuts, we don't think that's possible under that constellation. Infrastructure is one interesting area where maybe there's a little bit more room for compromise, but he found it so hard to do that during the first term due to disagreements on how to fund it. So I think we'd be a bit skeptical there. So I think there are elements of the status quo there. I think you probably can see further fiscal support, but I think it's probably a little bit more modest in size, and the composition of that looks a little different, with less support, for instance, to state and local governments being one key differentiator. So I think there's some aspects of status quo. I think the market might think of it more as a status quo.
Right, right. No, I think that's pretty clear. So given that constellation of growth outcomes from different political outcomes, maybe now let's move to markets. And I know we did a piece of work with colleagues from across our asset classes, so equities, credit, fixed income, the government bonds team, and alongside that, a number of multi-asset colleagues and even private markets. We brought together a big group of people, specialists in these areas, and tried to work out for these different outcomes, what does that mean for markets? When markets realize this is the outcome, what happens? Which are the winners? Which are the losers? How do the headlines move? So, James, maybe to start off to talk about these results, is there a kind of a best outcome for markets? Is it that straightforward to be able to say that one of these outcomes is the best outcome for markets, or is that a little bit too simplistic?
I think what this exercise sort of uncovered, and I think what we found really interesting during this exercise, was that while we might think of markets being up and down under different scenarios, I think the main messages we were getting from portfolio messages was that the sector rotation, so the movement within markets, would almost be the main attraction. So if I sort of try and characterize what the main findings from some of that work was, we did sort of come out with the conclusion that the Biden sweep, that Democrat sweep, in which Democrats were able to unify government, is probably one in which you get some decent sort of risk on in terms of equities, in terms of credit, in sort of initial trade when markets are realizing and pricing in, probably based on that fiscal environment. But interestingly, underneath the surface of that, you're getting a really big sector dispersion. So some of the winners, particularly on the equity and credit side, might be those more cyclical names, maybe a bit of an improvement in the value stocks as well. Names which are quite sensitive to some of those spending priorities that the Democrat sweep would see legislation delivered upon, things like segments of the healthcare sector which are sensitive to the Affordable Care Act expansion, obviously sections of the green energy industry which would benefit from infrastructure spending in that sort of area. But equally, there are some losers. We've not spoken a lot about regulation, or at least labor relations under a Democrat sweep, but low wage employers would probably be nervous about Biden's proposal to raise minimum wages to $15 an hour. There would obviously be companies with high tax exposures would be very, very nervous at the corporate tax proposals. More traditional fossil fuel intensive energy sectors would be ones which would potentially come under the microscope there. So I think the interesting thing we got is that while that might feel like the best in terms of, I suppose, the initial risk on sentiment, which reflects probably our sense that it's the strongest sort of near and medium term growth scenario as well, there's really a lot of things moving under the surface as big policy changes across a range of dimensions. They'll have to be priced into the market, and that will cause quite a lot of chopping and changing, I think.
Yeah, I think that's quite an interesting and nuanced way to look at it, rather than the usual kind of, will the S&P be up 10% the day after? But really that kind of story about the sectors, and I kind of underscores the point you made at the beginning, which is that the Biden policy proposals, if he can kind of carry them out, assuming that there is a Democrat majority in the Senate as well, really do imply quite a significant shift in the composition of government support for different areas, and also in the regulatory sphere. And all that kind of does suggest that at the sector level, naturally, investors should be aware of those sectors that are best set up to do well in that environment. And also then, as you've pointed out, I think quite clearly, those that are slightly more at risk. So if we were to have that Biden administration, so we still have the kind of regulatory pressure on places like tech, healthcare, fossil fuels, as you mentioned, how dependent is the kind of overall market sentiment on the Senate majority? Or if you weren't to see Biden win the White House, but the Democrats not get a majority in the Senate, what does that do to that kind of constellation of market impact?
Yeah, I think markets will discount some, I suppose, impact from the Biden presidency along the lines of he can interpret current regulations in a different way. He can use executive orders to influence aspect of regulation, although he won't be able to legislate on new regulations. So we'll have to price that in when we think about the tech sector and the way in which that might be regulated over coming years. I think also markets will price in maybe the change in the geopolitical and trade policy outlook under the Biden scenario. So one in which he is a little more multilateral, he's a little less erratic, but obviously not, as we've discussed in the past, an environment in which we're expecting a very rapid improvement in US-China relations, for instance. But I think more generally, the focus might be on, just this concern over policy stasis. So this sense that if Biden is facing a split Congress and unable to pass anything meaningful in terms of short-term fiscal relief, what does that mean for the recovery? Does that mean you see those cyclical sectors come under quite significant pressure? So I think almost you get some reversal of the Biden sweep in that aspect. Markets would probably have to price in a weaker macro environment and then quite a different probably trade policy environment and some differences in the regulatory environment, albeit less with fewer teeth if Biden were able to legislate under a unified Congress.
Yeah, I think that's again kind of that real message coming through that it really matters who ends up in majority in the Senate for not only the growth outlook but also for the market implications and where that hits and where that helps. One last question before we wrap up here, which is again going back to Trump. If Trump holds on to power, if we have President Trump for another 4 years, in that split Congress that we talked about, so Democrats still have the House. What sectors did we identify as being kind of more winners or, tending to do better in that environment? Is it essentially kind of, again, business as usual? Is it the same kind of sectors? Is that the story we should take from it? Or is there something else?
Well, I think some of those sectors which might have been pricing in a bit more regulatory or policy interruption from the Biden presidency will potentially rebound a little. So if we think about concerns in the financial sector around regulation, I think it's clear that Trump would continue to push relatively light touch regulation there. Similarly on the energy sector, so concerns around how the energy sector, particularly fossil fuel intensive energy, is regulated, fracking restrictions, etc. So I think those sectors might stage something of a relief rally. I think there's some. Obviously, we do think there's some potential for short-term fiscal support there. So markets might be relatively content with that middle ground. It's probably not an environment in which you get a massive rotation towards the more cyclical names and value stocks. But I don't necessarily see them, or we didn't necessarily see them as being major losers in that dynamic too. So maybe in terms of how the market is pricing, it will look a little similar to what we've seen over the Trump term. They'll obviously have to factor in some potential geopolitical uncertainty too. We've highlighted that phase one trade agreement, while it has held so far, looks very, very shaky if we move into a Trump second term. So, maybe some aspects of multinational companies or companies with supply chains would have to price in a continued disruption or risk of disruption from that front as well. So maybe less, again, relatively modest aggregate moves, but just a different character to some of those sector rotations, and perhaps some of those sectors that have won or been winners through the Trump presidency so far, perhaps feeling good about their prospects under the next term.
That's great. Thank you so much, James, for all that. I think it's been really useful, and hopefully for listeners has provided that real link between, why these US elections really do matter, not just from a kind of a political perspective, but actually really an economic and market perspective. So thanks so much, James, for joining us.
Thank you.
So for the second half of the podcast, Steph is going to take the metaphorical hot seat, and I'm going to ask her what we are watching in terms of polls and important developments with only days to go until the election itself. And Steph, perhaps a good place to start is with the latest head-to-head polls for the presidency. So they've been showing actually a slight narrowing of Biden's lead over Trump since about mid-October, back into the single digits. But at the same time, as some of the popular election outcome forecasting models have actually been increasing the probability of a Biden victory. So what's going on here in terms of the presidential race?
So there's a couple of things going on. So I know maybe if we start with why are the forecasts continuing to increase their odds for Biden? And part of that, I know with a number of the models, they assume a degree of tightening, but kind of going into the election, and that's what we're seeing at the moment. So to an extent, any model that's built that assumes tightening, if it tightens as much as is expected, then it doesn't necessarily move. If it doesn't tighten quite as much as expected, then it naturally starts to move to give more credibility to the candidate that's in the lead. And I think what we're seeing in the actual polls is, yes, we are seeing that little bit of a tightening. So we've gone from about 11 points, really kind of 10.5 to 11 points, to about 9.5 points. So not insignificant, but still worth bearing in mind that a 9-point lead in the US election in such a polarized partisan environment is actually really quite striking. I think, if anything, potentially there were many who expected that it would actually narrow a little bit more. So I think against that backdrop, we need to bear in mind, a polarized partisan electorate is signaling a 9-point lead for, the Democratic candidate, a couple of days out before the election. And that's really quite striking, and I think is symbolic of why confidence is actually growing, because 9 points is still 9 points in the US election.
Yeah, so clearly, as you say, the most likely outcome is obviously that Biden victory. But what are some plausible reasons why it could still be a President Trump re-election? I mean, is it polling error that might be going on? Is it electoral college maths? Is it a last minute unforecastable development like the Comey letter in 2016? And what are those things that can actually cause it to be a Trump victory?
So I think it's useful for people to bear in mind that the US election isn't just one election. It's really 50 separate elections that are run with slightly different rules, slightly different norms, different demographics in different states. Different behavioral kind of aspects, different partisanship, everything. We really do have a lot of diversity across those 50 states. And so what that means for trying to say with high conviction that anyone is going to win is, you pointed out a few things. So one is polling, and state polling is obviously, to me, much more important than national polling. While national polling is indicative, so a 9-point lead nationally is indicative of quite strong performance in kind of key swing states, it's still not it's not kind of a direct 1-for-1. So that's one thing to bear in mind. And we are seeing some narrowing in some of the polls, in some of the key swing states, mostly from pollsters that are more Republican leaning. Now, that may be that they are capturing Republican voters better, or it may be that their methodologies are such that they end up looking kind of slightly more flattering to Republican candidates. We can't know that, unfortunately, but I guess ideally one would be looking at purely independent pollsters, because then the question about partisanship doesn't come in. So I think if you were looking for signs that Trump could do better, it's the same things from 2016 that I think people are looking to. So, there are a couple of polls in a couple of the swing states that suggest that Trump is doing better than other polls do. Again, those are kind of partisan. And then on top of that, we have uncertainty about mail-in ballots. We've never had so much kind of early voting in the United States, not just mail-in, but I think mail-in is the issue because there is some uncertainty around, their ability to count and kind of deal with that level of mail-in votes, both from the postal system's perspective and also then from the perspective of managing an election on the day. So those kind of things add an element of uncertainty, I would say. And then the last point would just be that Trump's voters were hard to reach for pollsters last time around. And so it may well be that those partisan pollsters are doing a better job of picking them up. Again, I am somewhat skeptical of that, but we really won't know until after we get the election results, because pollsters kind of are always fighting the last battle when really, 4 years is a long time and a lot can shift demographically and politically in that time, such that you may end up paying attention to the wrong dynamic and missing something else.
So maybe switching track a little bit, as the conversation with James very clearly highlighted, much depends, of course, on the Senate outcome. But if anything, polling is, I think, even worse, or certainly sparser when it comes to Senate seats. And it's just a much closer run thing, right, than the presidential race. So what's the latest information we have on the likely Senate outcome?
So that's a really good point to make up front, is that polling for the Senate races is even more challenging than the state races, which is challenging in itself. So I think that's important. What we know is that we have kind of a state race tracker or a Senate race tracker. And what I kind of tend to do is I treat them with quite wide margins of error. So the average margin of error on a poll is about 3 percentage points. I kind of actually I've been applying about 5 percentage points as the barrier before I start to say that looks like it's a race that's really doing well for Democrats. And as it was a couple of weeks ago, there were about 6 races that looked firmly Democratic based on the admittedly sparse polling that we had. Now it's looking more like 4. And that may be because, again, there's so few polls that if you get 1 or 2 polls that suggest the race is tighter, that can really alter the overall kind of average that you've got, just because there are so few polls to draw from. So it may be that there's just a couple of outliers. And in particular in Arizona, I think that's what's going on. So Arizona was one of the Senate races that was firmly blue and has now kind of drifted into the more uncertain category because of a couple of polls. I expect that might drift back out again. But there is also an important additional element to bear in mind, which is the prevalence of straight ticket voting in the United States and the tendency that if you vote for president in one state, you're likely to vote for the same party for Senate. Now, it's not guaranteed, it varies, but over the last number of years, it has become much more prevalent rather than less. So that's another indicator we have to take into account when we look at Senate races is how is Joe Biden doing in that Senate race, as well as then how is the Democratic candidate doing? And the reason we're focused on Joe Biden and the Democrats is because we're focused on the states where Democrats need to flip in order to get to that majority, which is our base case.
Great. So maybe as a final question then, when are we actually going to know all this? When are we going to know the result of the election? Because, of course, it's not at all clear that will necessarily be the 4th of November, or at least there are scenarios in which it's not the 4th of November. And particularly in the Senate race, where you've got this special election in Georgia next year. So when, are we going to know all this the day after or not?
I wish. No, I think we could say we will know a lot of races, at least to a degree, the day after, and which races matter. So basically, if you take a state like Florida, Florida started counting all its early votes 22 days before the election. And so they're pretty well positioned to give kind of quite rapid results. So Florida is a state that you might expect we do get results on kind of the day or the day after. And that kind of matters because Florida is a state that I would describe as, and I think we've said this on this podcast before, but Trump basically can't win re-election without Florida, but Joe Biden could win election without Florida. It's just a harder path thereafter. So if we see Florida fall to Biden, I think that there would be a strong expectation that this is, that Biden is likely to win. But there are a number of Midwestern states that don't even start counting their mail-in ballots until after. So like Pennsylvania, a crucial swing state, doesn't start counting its ballots until the day after the US election, as in the mail-in ballots, which we know have been a major component of voting. So these are all factors that can delay. So what it means is we may get a state like Florida that gives us a really strong indication, but there are lots of other states that matter for whom we won't necessarily have results the day after or the day after that. There is some uncertainty about how long it will end up taking because the prevalence of mail-in ballots has been so large. And again, it's very variable by state, both in terms of the rules about when you can vote. Some states you can actually vote on the day, so long as it's postmarked on the day, you can vote that day, but your ballot might not arrive for a couple of days. In other states, you have to mail your ballot in time for election day, so it's not enough to just be postmarked. And then the way that they count them and process them is completely different in different states as well. And that's why there's so much uncertainty. And that's why we're keen to stress that we'll have a lot of important information about the US election the night of and the kind of the day after, but we won't necessarily have all the information. And some of that information is really crucial because Pennsylvania is a crucial part of Biden's potential path to winning the White House, particularly if he doesn't win states like Florida or Arizona. And then the last point I make just on the Senate is absolutely, in a way, we could get, very clear results in terms of the presidential election. But if the Democrats say got to 49 seats, there's a special election taking place in Georgia for a Senate seat, but it's a 2 round. So unless one of the candidates get 50% on the day, which seems somewhat unlikely based on polling, there'll be a runoff in January. And so that could mean that we might know we have a Biden presidency, but we won't know whether we have which outcome, a clean sweep or a split Congress, until January. And for investors, that means a lot of uncertainty. Everything that James has said earlier in this episode really reinforces the difference between Democrats having a majority in the Senate and not under a Biden presidency is the difference between a massively different market environment and economic environment for the next 4 years.
Steph, brilliant. Thank you very much. And thank you to James as well. Well, we're going to be back for another episode on the 4th of November, the day after the election, when we may or may not know the result. But either way, we're going to be digesting what it all means for the economic, political and market environment. But until then, thank you and good luck out there.
This podcast is provided for general information only and assumes a certain level of knowledge of financial markets. It is provided for information purposes only and should not be considered as an offer, investment recommendation, or solicitation to deal in any of the investments or products mentioned herein, and does not constitute investment research. The views in this podcast are those of the contributors at the time of publication and do not necessarily reflect those of Aberdeen Standard Investments. The value of investments and the income from them can go down as well as up, and investors may get back less than the amount invested. Past performance is not a guide to future returns. Return projections are estimates and provide no guarantee of future results.